When was the last time you actually sat down and looked at your financial picture to get a sense of how you're doing? Or are you just winging it and hoping that everything's going to work out? Well, today I'm going to walk you through a financial report card that I built that's going to help walk you through some key areas to know how you're doing. Knowing where we're at financially can be huge when it comes to knowing what we can do with our money, what opportunities we can take advantage of, and what areas we need to correct. Well, today, and this report card is going to give you that sense. You're going to know what areas you may need to adjust, and what areas you're doing great on. I built this financial report card to help give you a clear and honest picture of your financial life so that you know where you stand, so that you know what opportunities you can take advantage of, or what areas you may need to adjust. I have used this tool in my own life for me and my wife to get a better sense of how we're doing financially, and I'm excited to share this with you today. One of the main areas that I have found so valuable with a tool like this is understanding your net worth and watching these numbers adjust and move in the right direction over time. If you're not tracking these numbers, then it can be easy to just wing it, like I said earlier, but when you're tracking these numbers, it's going to motivate you to get going in the right direction. If your net worth is negative, then this could be the chance to get it moving towards the positive. So use the financial report card today to motivate yourself to do better in whatever financial area you feel you need to improve in. So let's get into the tutorial today, and I'm going to walk you through exactly how to put in all your numbers, what to do, and what all of this means. So we're going to head over here to my financial report card, which you can find by going to the website and then click on resources, and then you can find the report card that way. Or of course, it'll be linked in the description below. But we're going to go ahead and walk through the report card here today. So as we're getting started here, of course, the first thing you're going to need to do is input all of your numbers. I've inputted some sample numbers here. So let's say you have a monthly gross income of $5,000. Your monthly total expenses is $3,600. Your monthly savings, including your employer match. And you'll notice that the report card will give you little hints of things to consider as you're inputting this information. So let's say your monthly savings contribution is $1,000. And you'll notice as I'm typing in here, the report card is updating in real time beneath you. So as you just keep going into your liquid savings, your total assets, your total liabilities, your annual debt payments, your credit card balances, your credit card limits, and your age. And a couple things to be aware of is make sure to pay attention of whether it's monthly or annual. You'll see here, annual debt payments of $2,000 isn't that bad, but you may be paying more than that. So make sure to be careful what kind of numbers you're inputting. Let's go ahead and say annually we're spending $10,000 on our debt payment. You'll notice it changes our debt to income ratio report card down here. But after you've entered everything in, you're just going to scroll down and it's going to give you your score, how many green and yellows you have. So if they're red, obviously that's critical. So let's say we have a ton more debt and see what that does to our report card. There we go, one red. So $100,000 obviously isn't realistic given the scenario. That makes your debt to income ratio 166.7%, which is far too high. So as we adjust that down, it all updates in real time. And then you'll go through each of these report card and these metrics on your dashboard. So I'm going to walk through each one here with you to explain what they mean. But the cash flow ratio, this is your percentage of income that's going towards expenses. The lower it is, the more room you have to save and invest. Your savings rate is how much income you're actively putting away for your future. Your emergency fund, and in this case, you can see it's at almost 14 months, which does show as green, but the opportunity cost here could be red. So this may be an instance where you're like, wow, my emergency fund is far too big. I need to put some of that into savings. And let's say we scroll back up and we do that. So we're going to take our total liquid savings down to $15,000, and we're going to add $35,000 to our savings by reducing our liquid savings. It's going to assume that the difference is in some sort of an investment account. So now our emergency fund is down closer to 4 months, which is great. The next metric is the debt to assets ratio. It's how much of what you own is offset by what you owe. So the lower the better. Keep this below 50%. That's a great point to be, but the lower you can get that to, the better. And then the next one is debt to income. This is the percentage of your annual income going towards debt payments. The lower it is, the better here as well. If that starts climbing, you may start getting denied for loans. Your net worth, this is a great one to track over time. Write it down somewhere else on a piece of paper and just keep track of it and watch it grow over time, because I promise as you start using these report cards and tools, you're going to see your numbers head in the right direction. And then your credit utilization, it's at 0% because we put in here that you have no credit card debt. Let's say you had $5,000 and see what that does to our report card. So now it moves it into the yellow category because it's saying you may have a little too much debt here, because keeping it below 30% is good for your credit score, but if you can push it below 10%, that's even better. And if it's at 0, that is great. And then the last metric here is your financial independence progress. This takes your annual expenses and multiplies it by 25. So the typical 25 times rule for financial independence. And it's going to tell you how close you are to being able to replace your income with your savings. So the more assets you have available, the closer you're going to get to financial independence. And now that's a whole nother podcast episode that we need to talk about financial independence. So I'm not going to go into too much more detail here, but that does it. That is an overview of your financial report card. So as you enter in your own numbers here on screen in the report card, it's going to give you an accurate sense of how you're doing and give you some parameters and directions to adjust. So whether your report card looks stellar and it's all green, or it's a lot of reds and a few yellows, that's okay. The whole point here is to get a sense of where you're at financially so that you can move forward in the right direction. So make sure you use the report card today to figure out how you're actually doing. It's going to give you a great sense of the areas that you may need to clean up and adjust. And that does it for today's video. Thank you so much for watching, and be sure to subscribe to the YouTube channel so you don't miss any future video, because I have a couple more tutorials coming out, or any future podcast episodes. And be sure to check out the report card linked in the description or at fp4ya.com/resources, and then click on the report card. What was your favorite metric on the report card? Leave a comment down below letting me know which one was your favorite and what you learned from filling out the report card. And thank you for watching Financial Planning for Young Adults. I'm your financial planner, Skylar Fleming, and have a great week.